Welcome to today's More Important Analysis videos with me, Richard, Market Analyst at Hantec Markets on Tuesday 19th of March. Let's have a look at these markets and basically the theme of recent days, which has been dollar negative, risk positive in front of this FOMC meeting, which is on Wednesday. That theme continues. We've seen the dollar just slipping again across the board. With the one exception being the Australian dollar, which you've got housing data, I'll show you very quickly. Housing data in Australia missed expectations, so bit of a disappointment there for the Aussie, underperforming. But generally speaking, this US dollar continues to slip lower, and what we've seen is the dollar, which is coming back to levels it was around about a couple of weeks ago, and that's as yields continue to remain very subdued, around 2.6%. The market is certainly looking at the Fed on Wednesday, thinking it's going to be a dovish Fed. It's a difficult one to really call whether that is actually going to be the case. Maybe the market has again gone a little bit too far, but for now, certainly the US dollar is a little bit under pressure, and that is likely to run, I believe, into that Fed meeting tomorrow night, UK time, 7 o'clock. But for now, what we've seen is risk positive, which means equity markets are rising. That has continued again today, and you can see the S&P 500 having broken to multi-month highs, highest since October, having broken out yesterday. It's continued, the day broken out on Friday, continued yesterday, and the futures are suggesting that we're going to have another positive open today. So looking pretty positive on the equities front. We've seen the DAX, which is now breaking up above 11,725 as we speak, and that again is another breakout to multi-month highs. So these markets are looking pretty well set up at the moment on the equities side, and certainly volatility wise at multi-month lows. So pretty much all confirming that move. So what we see today is risk positive and dollar negative. So we got the UK unemployment data out this morning, which actually came strangely, was announced early, a few minutes early, and no real reason why that has been happened yet. So I'll keep an eye on that. But certainly falling to 3.9% on unemployment, that is low since 1975 apparently. You've got average weekly earnings, which are staying up and looking decent. So it's some good numbers there, and really positive on earnings, positive on unemployment, so that should be sterling supportive. Sterling a shade higher on that, nothing really doing though yet. But we've also got German ZEW economic sentiment at 10 o'clock, which is expected to improve for the 5th straight month to minus 11. So that takes me to my chart of the day, which is the Aussie versus the Kiwi, which I think is a pretty good chart actually. Look at that downtrend we've been in since August. That's the broad long-term downtrend now. However, look at this shorter term downtrend, the downtrend of the past 6 or 7 weeks. On numerous occasions, that downtrend has been hit and then falling away. You've got the momentum indicators, which are all negatively configured within that. The RSI seems to sort of hit around the sort of early mid-40s and then falls away in the last 4 weeks. Again, hitting that on the rally back to the downtrend. You've got the downtrend back to 103, the resistance at 103.65, that old support. If I zoom out, you can see the importance of that old support. Wow, that is the Q2 2018 low. So again, a very important level. Old support becomes new resistance, and it's rallied back towards that and started to fall back again today. So is this a selling opportunity? I would suggest yes. I think we're going to see further weakness to retest that low again, 102.90, and then the reaction low comes in from, well, these lows here, 103.20 has been already broken, so you're then looking back at 102.35 from Q3 2016. So it's likely to be that level is hit. A little bit of an unwind move on the hourly chart, but certainly if the market starts to fall back again, initially below yesterday's low of 103.40, that would start to sort of gain the traction to the downside and put pressure on, and selling into strength seems to be the way to play Aussie Kiwi. So with that in mind, I wish you good luck in your trading today, and I'll speak to you again later.